Welcome to Live Better Longer. I'm your host, Bill Borton. Except this week, I'm not your host. Al Cini, my good friend,
Always
is
a pleasure.
hosting today, and we're going to talk about long-term care planning and insurance. So Al, take it away.
Well, thank you, Bill. I appreciate that. And I want to start with a question that is burning in my brain. We're talking really more about a friend of mine. We're not talking about me. This friend of mine is getting a little older. This friend of mine is worried about things that normally concern people who are getting a little older.
Yeah.
And one of the questions I have is long-term care insurance. I know that's not just what you do. You do a whole lot more than that. But what is long-term care insurance, and what do people need to consider it?
Well, long-term care insurance, Al, is a way of transferring the financial risk of having to pay for long-term care. So then let's back up and say, well, what is long-term care?
Okay.
All right.
And this is your point. Your point is you're going to need long-term care.
Well, you may or you may not.
Okay.
You know, people have heard me say before, there's only two ways you can die, conveniently and inconveniently. You know, everybody wants to live to a ripe old age after having a good round of golf and then die in their sleep.
That's pretty much what I was planning.
It's pretty much not the way most people go, you know. So, so most people are going to need care for some amount of time, and it could be 3 days, 3 months, 3 years, or longer. You never know. But so, you know, care could be provided in a lot of different settings. But first of all, it's not medical care. Medical care, doctors and nurses, is provided for, you know, hospitals and doctors' offices, urgent care centers. It's paid for by insurance or Medicare. But long-term care is actually what's known as custodial care. It's care for people who need help with what are called the activities of daily living.
And assisted living facilities, things like that.
Well, those are facilities. Those are places where you can receive care. But care itself is care with the activities of daily living.
Okay.
Getting dressed, getting up and around, getting, you know, food, things along those lines, basic stuff that you and I take for granted. But when people get older and they get frail, or they, as my mother used to say, lose their marbles, or what's known as severe cognitive impairment in the jargon of long-term care insurance, people need help. And most people who are going to be living into their 80s or 90s at some point are going to need some help. And that's what long-term care really is. So most of the time, long-term care is received at home. And most of the caregivers are family members. And so when that no longer works, then you deal with things like adult daycare centers, assisted living facilities, or the dreaded nursing home.
And those things all cost money.
Lots of money.
Lots of money. And to help with that, long-term care insurance.
Well, there's three ways you can pay for care. One is to essentially be broke and go on welfare, which is known as Medicaid, not Medicare. And the other extreme is spend your own money. So people who have significant wealth say, well, I'm just going to self-insure. And so that means that when the bill needs to be paid for care, they're going to write a check. But for millions of Americans that don't aspire to die broke and who can't afford to write the checks themselves, some kind of insurance is probably a good idea.
Okay, great. And how much does long-term care insurance cover? I mean, what are the limits of that coverage?
It depends on what you buy.
Okay.
So regardless of the kind of policy that you buy, you're basically buying a pool of money. And the pool of money is generally expressed in either a daily or a monthly benefit that begins after a waiting period, elimination period, deductible, okay? Then how long is that going to be paid? Is it going to be paid for 2 years, 5 years, 10 years, however long it's going to be paid? And so the benefit amount times the duration is the pool of money.
Is the pool of money, okay.
Okay? And so you generally need to kind of figure out, where am I going to want to receive care? Who's going to provide it? What's that going to cost in today's dollars? Then we fast forward, depending on your current age, to maybe mid-80s, which is when people generally need care, assume an inflation rate, and then kind of back it all down.
So the long-term care insurance equation is something I'm sure the actuaries go crazy over, trying to figure out how to rate that and how to charge for that. What are the premiums typically, and how do they vary?
Al, it's all over the place. It depends on the insurance company. It depends on the ages and genders of the people that are involved. It depends on their health history. It depends on the type of policy. It depends on the amount of that pool of money you're looking to create. There's no easy answer for that. You could go out and buy a long-term care insurance policy as a single guy at age 50 and get a meaningful amount of coverage for maybe $1,500 a year. That premium might go up over time, but then a couple might end up looking at the same type of policy only for better coverage. If they were, say, in their 60s and one of them wasn't real healthy, it could be $6,000 a year, which is out of the reach of a lot of people.
Okay, now, I mean, first of all, you're very valuable to me. You're one of my best friends, and I love you, Bill. But a reason why people would want to get to know you is because that sounds like a very complex process with a lot of prognosticating that a lot of people are just not comfortable doing on their own. And that is where you come in as a counselor, isn't that right? As a trusted advisor.
I tell people that I'm an educator and I'm a consultant that gets paid on commission. Because when you're an insurance broker, that's kind of how it works.
Okay.
The interest from my perspective, is in helping people and helping them to understand and decide and plan and put together something that's going to work so that they and their family end up in the best possible situation at some future time when somebody needs care.
Okay, so you don't sell long-term care insurance, you recommend it.
I help design insurance policies and put them in place and get paid a commission. I prefer to think that I'm not selling insurance.
Because the truth is, after we have a conversation, there's a good chance you'll recommend against it.
Well, it's not necessarily that I'm going to recommend against it, but there may be a situation where somebody that wants to talk to me really can't afford it, or somebody that ends up sitting down with me is unhealthy and can't qualify, or somebody has a situation where it just doesn't make sense. Maybe they have $10 million and they have all the liquid assets that they need.
Great. Well, we need to take a break. And when we come back, I want to talk some more about long-term care insurance. In particular, I think you brought a couple of articles that you told me about a few days ago.
Sure.
So we'll be back with more Live Better Longer.
With your guest host, Al Cini.
Yeah, your guest host, Al Cini, and my guest, the wonderful and fabulous Bill Borton. We'll be right back after this. Welcome back to Live Better Longer. This guy's name is Bill Borton.
And I'm normally your host, but today I pass the duties on to my friend Al Cini.
Because Bill has a lot to share with us about a lot of really important issues that he specializes in that are right in the pocket, right in the wheelhouse of the program, Live Better Longer. And during the break and before, well, over the years, we've talked an awful lot about baby boomers planning for that next stage in their lives, wanting to make sure that they don't die broke and that they don't run out of money and that they do it right and they don't become a burden on their loved ones. And there's an awful lot of really, really skewed kind of thin reporting out there on options for those plans, like reverse mortgages and, in particular, our topic today, long-term care insurance.
Right.
And an article that you pointed out to me, I think originally appeared in the Wall Street Journal. Normally they're known for pretty in-depth reporting, but this is a case where they didn't get the story right. Isn't that true?
No, it was a fairly extensive article, Al. It was published in mid-January, and quite a few people sent me copies of it, and so it was really making the rounds. And so essentially it was no news that anybody hadn't heard about already. It was old news, but it was put together in a way with some couples, elderly couples that were being hit with rate increases, and it was basically just a bad news sells article. And really, I thought that it was extensive, it was accurate, but it wasn't doing anybody any good. It wasn't helping the consumer, it wasn't helping the industry, and it was actually dissuading people from wanting to consider long-term care insurance.
From wanting to think about it, which is, I mean, they may decide against it, but think about it at least.
But so, you know, you don't make important financial decisions based on an article you read in a Wall Street Journal. So, at any rate, about a week or so ago, I was at the American College of Financial Services over in Bryn Mawr in their television studio to shoot several videos for their RICP designation curriculum on long-term care insurance products and planning and the like.
Impressive.
And so before we got started, Dave Littell said, Bill, Jamie Hopkins is a regular contributor to Forbes magazine. And he wants to publish a rebuttal to the Wall Street Journal article. So we'd like to shoot a brief video talking about the article. And so they interviewed me on camera. And then the Forbes article was published later that day with the video embedded in the article, and I got to mention.
What's the date of that Forbes article?
The date of the Forbes article is January 22nd of 18. And
Okay.
anybody who's interested can either look it up or they can just ping me.
Contact you.
And I'll be more than happy to share it with
And
them.
the rebuttal, what did you say?
Well, the rebuttal, basically, we talked about how the policies that people are getting rate increases on are older policies. Typically were sold with lifetime benefits and 5% compound inflation. And so the factors that have impacted long-term care insurance, zero interest rates for so many years, higher than expected claims, very few people dropping their policies, which would free up money that the insurance companies could use.
Sure.
All of these things have really created a big problem, and so they've had to raise rates on existing policy owners. But these older policies with these extremely rich benefits have been underpriced. Now they understand the kind of money that they need to collect to support these, so they're raising rates on people. But if you're getting a rate increase on a policy that's got richer benefits than you're ever going to need, you can reduce the benefits.
Reduce the benefits and save some money.
To a
maybe even
reasonable
lower
level.
premiums.
Yeah, and you still have a very meaningful amount of risk transference and not putting yourself in harm's way and keeping the rates down. So that was the point of the portion of the rebuttal that I spoke to.
Well, I think broadening the story to include all those factors and helping people understand that they don't just raise your rates because they're looking to make a profit on you. They raise your rates because actuaries calculate the cost of delivering the benefits.
The regulators have to make sure that the insurance companies are solvent, and you're talking about a 20, 30-year or longer guarantee. And so between the actuaries and the claims people and the regulators, you have to be able to maintain sufficient reserves for future claims.
Sure, that's
and
it.
so if your investments and your claims and your expense management aren't going to do it alone, then you're going to have to get more premium dollars. And unfortunately, that's impacted a number of people who are senior citizens now.
No, that just makes sense. And so it still makes sense to consider long-term care insurance.
Absolutely.
I mean, it's regardless of what they might have implied in the Wall
There's a
Street Journal.
whole palette of different types of insurance products, traditional long-term care policies that incorporate life insurance and long-term care in one way or another. There's several ways, annuities and long-term care. So there's really a solution for everybody when you come right down to it. Whether you want to get all the premium payments out with one big payment up front, or whether you want to pay for it over your lifetime or for a limited number of years, there's a number of ways that you can transfer a meaningful amount of the risk as long as you're not too old or too sick.
And that could be worked out in concert with discussions with my loved ones. I mean, it's really a family solution that we're looking for.
Well, again,
It's not,
the insurance is the funding mechanism
Right.
now to fund a plan that is the result of what I call the conversation.
Sure.
And the conversation needs to happen among family members, and then it needs to also involve some of the family members and someone like me,
right.
who specializes in long-term care planning
And knows how to do the
insurance.
math and knows how to ask the questions that you really need to answer in order to really understand the problem.
And all the different types of insurance solutions and what's possible based on your age, your gender, what state you live in, because
that's-
policies all have to be approved in every state. So there's a lot of factors that are involved. And so I'm taking it's like putting together a big jigsaw puzzle. I got to get all the pieces turned right side up so you can see them. And then I've got to start putting the thing together. And it includes what are the preferences of the people who might actually have a plan in insurance? What's their health like? What's their marital status? What's their financial situation? Do they have life insurance already that could be used to help fund the insurance? Where do they plan on receiving care? Are they going to stay in this area? Are they going to go down south? There's all these different issues.
All those things have to be
And
considered.
then, do you want a reimbursement policy or do you want a policy that pays cash? There's so many different ways you can design solutions now that it really is a fairly significant process that people have to get involved with. But I can't do it on my own. You can't just say, hey, Bill, get me a policy.
No, it's
and
not.
you can't figure it out on your own with the internet. I mean, you can only Google search so much. So at some point, we have to have the conversation.
Yeah, it's really not about products. It's really more about that whole planning process. It's really a service. And how long have you been doing this, Bill?
I started my firm just about 7 years ago to focus on long-term care planning and insurance for baby boomers. Since that time, it's expanded into some additional areas so that I refer to myself as a retirement risk manager now. But other than living too long, just because, long-term care and healthcare costs in retirement are probably the two biggest potential gotchas that most people don't really know what to do about.
Yeah.
And so the long-term care planning and insurance is something I'm very passionate about. Both of my parents required care before they died. Both of them had dementia. And so, you know, it hits home with me.
You know, it hits home with a lot of people. And we need to take a break. When we come back, I want to talk more about the conversation.
Thanks, Al.
Maybe have an example of it with me. We'll be right back with more Live Better Longer with your host, Bill Borton,
And my guest host, Al Cini.
Al Cini. We'll be right back after this break.
You.
Welcome back to Live Better Longer. My name is Al Cini.
And I'm Bill Borton,
And
usually your host, but
usually
today,
the host. Today
Al's
I'm-
taking over for me.
And I'm filling in because there's so much you have to share, Bill, and there's so much I think that people out there need to get to know about you, that it's a real honor and privilege for me to try to draw that out of you today. And so before the break in the last segment, we talked about the conversation, that discussion that you have with people about what their plans are. So let's have that conversation with me. Let's assume that I'm your client.
Well, so because of the time constraints we have, Al, I'm going to just kind of really go rapid fire here.
That's fine.
Okay, I don't normally go at this pace when I'm sitting down with
That's-
people for
that's
the first
fine.
time. So Al, what experiences have you and your wife had with caregiving?
Well, we've got some relatives, so we have some experience with what's involved in that.
Okay, and have you and your wife put any kind of plans in place for when you might need long-term care?
You know, we can sort of talk about it and then we stop talking about it.
Well, that's not unusual. So, what do you know about where care can be received?
Not much, except the experience we've had with those relatives.
And do you really have much of a handle on how much it costs?
Well, we know what the numbers are because we participated in some of that, but I don't really have a good handle on what the alternative costs might be at all.
But so you don't have any insurance in place at this point?
No, we don't have any long-term care insurance.
Okay. So do you have any life insurance?
I have some life insurance.
Is it term life that's just death benefit,
I
or
have
is it the kind
term
that has
life. I have
cash
a term
value?
life policy.
Okay, gotcha. All right. So, well, what we need to understand, Al, is whether or not you have sufficient resources to pay for long-term care.
Okay, great.
And if you do, then insurance becomes optional. If you have got very little in the way of resources, and I happen to know that's not the case, then you might want to contact Casey Price, the elder law attorney, and find out what you're going to need to do to qualify for Medicaid at some point.
Okay.
But for the most part, you and your wife probably would want to at least understand what your options are as far as some type of insurance to transfer a portion of that risk.
A portion of that
Yeah.
risk. That makes perfect sense to me. So you're going to ask us things like how much do we have in the bank, what kind of liquid assets do we
Yes.
have? How
Normally, before we get together the first time, you provide me with some basic financial information
We have a questionnaire
and brief
for that.
health
I've seen that.
history.
I've seen that questionnaire.
Yeah,
Just
they're
one
very,
page.
very brief questionnaires.
Yeah, it's pretty simple.
They aren't expected to be provide me with in-depth information, but they give me a good idea, and they help me frame the conversation so we can do a better job of not wasting time.
Okay, great. Have you ever made the same plan twice for two different people?
I don't think so.
No, it's really not at all one size fits all.
No, not at all.
So it's a very custom process that arrives at an agreed upon statement of the problems that we face and a commitment to make some changes to address those
Yeah.
problems.
Once I understand your ages, where you think you might be later in life as far as geography is concerned, because care costs a lot more in the Philadelphia area than it does, say, down in the South or
good point.
Southwest. So you want to make sure that if you want to be able to receive care at home, or if you ultimately need to go into a facility, what type of facility, what's that going to cost? And then how much in today's dollars of that do you want to assume as your own risk, and how much do you want to transfer to an insurance company?
No, that's great. So
Then-
so where I'm planning to retire would also be factored
Correct.
into this. That
So
makes perfect sense.
then we need to take a look at what states they might be, and we need to take a look at what insurance companies' policies are approved in those states. Then we need to take a look at what funds that you have that might be available to pay for some of that insurance to transfer the risk. And so as we go through this process, the solution starts to become clearer and clearer and clearer to me, because basically we're putting together that puzzle again. And literally each step of the process and the conversation, I'm eliminating things.
Right.
And so ultimately, I tailor a solution for you and your wife that if we've been completely candid with one another and haven't skipped over anything, the solution becomes fairly clear to me, and then I present it to you and your wife, and if I've been doing my job appropriately, it shouldn't be really unexpected.
Yeah, well, you see, and to me, it's so obvious that it's a level of planning I think that most people tend to avoid for obvious reasons because it's not a pleasant thing to think about. But if you don't plan for it, it's just going to happen to you without a plan, and that's worse.
Yeah, when the family has the phone call in the middle of the night and all of a sudden you've got a crisis, that's not doing anybody any good.
No, to have to rush around trying to figure out, playing catch up at that point is not a fun thing. So
Having the conversation, Al, doesn't have to be difficult. It doesn't have to cost a lot of money. As a matter of fact, you don't have to pay me any money to have the initial conversation. And it's all about finding out what matters to you and your wife, what you know, what you don't know, what you want, what you don't want, and then we start to figure out what's possible. We design a solution that's tailored for your situation. Ultimately, I want you to feel better about growing older, like you've actually gotten one of the unknowns out of the way.
one less big thing on my mind, which just makes retirement a lot easier to deal with.
Sure. You want to enjoy it.
Yeah.
You don't want to be worried.
That makes sense. Now, you'll work with if I have a financial advisor, he or she is not ruled out of this.
Not unless they become adversarial to the process.
How often does that happen?
It depends on the type of advisor and who they work for and what their agenda is. Some people have advisors that are very collaborative with the process. Other people have advisors who feel that I become threatening to them in their relationship with you. It's all over the place.
Well, let's make that really clear. You're not coming into this conversation with me with the intention of unhooking my financial advisor.
Good God, no. Absolutely not.
Right. So they may perceive that.
I want to help you. And as long as the other people that are in your life, an attorney, a financial advisor, or an accountant, as long as they're keeping your best interests in mind, and as long as they're willing to collaborate with others to put together a solution that's in your best interests, then I'm perfectly happy to collaborate with anyone. But if someone doesn't want to collaborate, or someone is more concerned about their best interests and sees me and the process that we're talking about engaging with them in as a threat to them and their relationship with you, then we have to have a conversation about that.
Yeah, well, okay, we're coming up on the end of your program, and so that's a chance to tell everybody how to reach you to learn more about some of the things we talked about. But I want to make the point before we do that there's much more to you than just long-term care insurance. Even though that was our focus kind of on the program, there are a whole bunch of reasons we want to talk to Bill Borton, and I talk to him every chance I get, including lifestyle choices and changes that you can make. I know there's a lot more to living better longer than just insurance.
Yeah, the whole premise of Live Better Longer is to take a very holistic look at what life in the last third to half of your lifetime can look like for baby boomers, around everything from finances and insurance to lifestyle, diet, nutrition, exercise, mindfulness, and we're working on touching all of it, Al.
Well, that's great. Okay, this is the end of your program, and it's your chance to tell everybody how to reach you so you can tell them more about what you know.
So you can find me just about anywhere online. You can call me at 609-534-3100. You can email me at bill@wrborton.com. You can go on my website, wrborton.com. You can find me on LinkedIn, Bill Borton. I'm pretty much everywhere, Al.
Bill Borton.
Thank you,
What a
Al.
pleasure talking to you. It always
appreciate
is. But you know so much, and you've got so much to share, and it's so useful. I'm hoping a lot of the people out there who haven't yet had the courage to have that conversation will find that courage and give you a call.
I think in the long run, they and their families will be glad they did. So until next Tuesday at 11, I'm your host, Bill Borton. This has been Live Better Longer, or on RVN TV. Thank you.